Hello everyone, my name is James and welcome to Quick Facts videos with Birgit. Economic contraction has definitely impacted trade. When compared to the fourth quarter of 2023, export value declined by over 10%. Countries that were demanding less of what South Africa was exporting, that is amongst the top 10 countries, you find that India depreciated the most or declined the most, followed by countries such as the USA, Japan, and Germany. In terms of commodities that were exported less by the country when compared to the fourth quarter of 2023, it's vehicles, electric equipment and machinery, beverages, spirits and vinegar, and mineral fuels, as well as precious minerals. So those are the commodities that declined the most in terms of exports when compared to the fourth quarter of 2023. The decline in export value is one of two things. The first thing would be a cooling down in global demand of, commodities, meaning that what is being experienced in South Africa from an economic contraction perspective or an economic stagnation perspective could be being experienced across the rest of the world, particularly the key partners that import what South Africa is exporting. I think the second thing is that the energy crisis now needs to be taken seriously and be solved beyond load shedding, because if the energy crisis is being addressed by load shedding, what we're finding is that the country is producing less, and if you're producing less, you export less, which impacts your trade as well as your trade balance. Import value also declined by about 8.5%. And I think a depreciation or decline in import value suggests that there was lower demand within the country in Q1 2024 when compared to Q4 2023. So you find that a lot of the commodities that are imported also serve as inputs, so it's inputs and components that are assembled within the country. So because of load shedding or the energy crisis, what you find is that less of what is needed to produce was being imported, and this could have had a significant impact on the decline in import value. The other thing that you also look at is a decrease in imports means that import substitution programs are actually working. But this is not necessarily the case for South Africa, because South Africa continues to import the same commodities, meaning that it was probably a slowdown in consumer demand as well as a slowdown in corporate demand, which used those commodities as inputs for production purposes, meaning that the energy crisis needs to be addressed, because it's not only impacting trade from an export value increase perspective, it's also impacting imports in terms of inputs that are needed for the production processes. When we analyze the commodities that are being imported less from a value perspective, you find it was mineral fuels, vehicles, and miscellaneous chemicals. So that again speaks to my point of inputs. What you find is that miscellaneous chemicals are definitely used as inputs into production processes, and if less is being demanded, it means that less is being produced, and there's a decrease in the final products. With mineral fuels, I think it's just an economic slowdown, so less fuel is required to transport goods and people from point A to point B. So maybe as the economy increases its output, increases its productivity, there could be a higher demand for mineral fuels as we go forward. And then looking at the countries which imported less, among the top 10 importers into South Africa in Q1 2024, it was the UAE, the US, Saudi Arabia, and Nigeria. And you find that most of these countries have a common denominator of importing mineral fuels into the country. And mineral fuels were the ones that experienced the greatest decline in import value in Q1 2024 when compared to Q4 2023. In terms of the overall trade balance, for Q1 2024, South Africa remained a net exporter despite the decrease in export value, and had a positive trade balance of 0.62 billion US dollars. I mean, this is positive, but then when you compare it to Q4 2023, the positive trade balance has declined by over 50%, because in Q4 2023 it was 1.22 billion US dollars. This again comes back to the same fact where we say the energy crisis is impacting GDP growth and in a way contributing to how do I say, a slowdown in export trade growth, particularly from a positive trade balance. So what needs to happen is that more needs to be invested into addressing the energy crisis. And how you address the energy crisis, it's the immediate solution is unviable, which is load shedding. So now what we need to do is we need to also increase beyond policy. And when I say that, it's just it's funding access which needs to be improved, particularly for smaller businesses who have smaller balance sheets when it comes to investing in alternative energy sources. Maybe if we can find cheaper debt that they can access, or more affordable debt which they can access to increase their capacity of generation, or increase generation capacity, and also have like a rebate, tax deduction or reward system which enables them to be able to afford to spend on increasing their energy supply capacity. Because if you're unable to address that, the economy is going to continue to be affected, and I think ultimately it will also impact trade and the gains that have been assimilated or accumulated over the last couple of years or quarters. Thank you for listening to me on Quick Facts Videos with Birgit. For more information on the work that we're doing, please visit our website on www.birgit.co.za.